In India, the capacity of the cement sector is increasing rapidly. CRISIL Ratings believes that this trend will continue until the financial year 2028. Now, if we go by the report released by CRISIL, it is estimated that during the period from 2025 to 2028, there will be an addition of 150 to 160 million tons of new capacity in the cement industry. This capacity expansion is happening with the aim of meeting the growing demand in the infrastructure and housing sectors. Now, if we look at the past 5 financial years, the capacity of the industry has increased from 119 million tons to 595 million tons. But the question here is the capacity expansion in line with the demand in the cement sector? What is the financial situation of companies in this sector? And is now the right time to invest in companies in this sector? Let's understand all of that in this video. If we look at the financial year 2022, there was an 8% increase in demand for cement, and if we look at the financial year 2023, the growth has been 12%. It is also estimated that demand will increase by roughly 10 to 12% in the current financial year. Why is that? Well, that is because there is hope for increased government spending on the infrastructure sector before elections and on affordable housing. In the budget for the financial year 2024-25, the government has made a significant allocation for the infrastructure and the housing sectors. In FY25, the government has proposed to spend 11% more on the infrastructure sector. Well, that means in the next financial year, the government is expected to spend approximately 11 lakh crore rupees on the infrastructure sector, which is 3.4% of the total GDP. This indicates a special focus on the development of roads, bridges, highways, airports, etc. This will lead to an increase in demand not only for cement but also for the steel sector. Moreover, the demand for cement remains strong in the first half of the year, especially before the monsoon season. Besides that, it has also been announced in the interim budget that Prime Minister's rural housing scheme will continue. Finance Minister Nirmala Sitharaman stated in the budget speech that under the scheme, a total of say 50 million houses will be built, and of which 30 million houses have already been constructed and 20 million new houses will be built in the next 5 years. This will also boost demand in the cement, steel, tile and consumer durable sector. But we also need to look at the impact on cement prices due to the continuous increase in capacity or cement supply. Experts believe that due to increasing supply and competition in the sector, price hikes will be limited to 1%. It is estimated now that the price of a 50 kg bag will remain between somewhere in the range of 390 to 395 rupees, and capacity utilization is also expected to remain between 70 to 75%. As for the price hikes, according to a report by Jefferies India, there was a 4% month-on-month increase in average cement prices in September 2023, and on a quarterly basis, there was a 0.5 to 1% increase in prices. Companies present in Eastern India were the leaders in price hike. Why is that? Well, the answer lies here. You see, during the period from the end of August to the end of September, there was an increase of 50 to 55 rupees per bag. Apart from Southern India, price hikes of up to 20 rupees per bag were observed in other regions as well. So, despite good demand, companies have increased prices. But what is the financial situation of the companies in this sector? Well, experts believe that compared to the first quarter of the past 3 years, there has been an average decrease of 14 rupees per bag in prices during the second quarter, that is, the period between July to September. Demand has remained quite strong due to government spending and normal monsoon. Additionally, companies have had to increase prices due to rising input costs. In comparison to the lows of July, there was a 30 to 40% increase in pet coke prices in September. According to brokerage house Elara Securities, the impact of increased prices in September will be seen on companies' margins in the third quarter, and this is also evident in the results of companies. But the big question, is it the right time to invest in companies in this sector? If yes, then where should you invest? Well, according to Arun Mantri, founder of Mantri Finmart, sentiment is positive for the cement sector and good growth can be seen in ACC, Ambuja and Ultratech Cement in this environment. From the perspective of, say, next 12 to 18 months, the target will be 3,400 rupees for ACC, 720 rupees for Ambuja, and 11,400 rupees for Ultratech Cement. Overall, with increasing government spending on infrastructure and housing and the expectation of strong demand for cement before the monsoon, companies may also increase prices in response to rising demand, which could improve companies' margins and profits. Now, in this scenario, it would be appropriate to gradually develop an investment strategy for selected companies in the cement sector from, say, a medium to long-term perspective.